Hello and good day. Daily analysis of the gold symbol on February 25th covering the events of the past day. The price experienced selling pressure and ultimately reached a unique range, and it reacted to a highly significant level, where there is also...
Do you know why your profits are smaller than your losses? Because you don't analyze your trades, you just execute them. Download the Trading Journal app for MetaTrader 4 and 5 for free now.
A fair value gap in this area. This can be considered a strong support zone that could push the price upward. If by the end of the day, the price manages to close above the previous day's candle and is accompanied by a high momentum candle, it signals the continuation of the bullish trend and sharp price movements toward its all-time high. That's what we're looking at. However, if it closes within the previous day's candle or moves downward and enters the FVG zone, from this point, it can normally form higher highs and higher lows and continue its bullish trend. Analyzing the 4-hour time frame for the gold symbol, we can observe the price movement. After entering the FVG zone, it was accompanied by selling pressure and eventually filled the gap area. It reacted to a support level, and at the same time, the 20-period moving average was also located here. This overlapped with the fair value gap zone and pushed the price back upward. It is predicted that the price may have a short-term slide downward. If it continues to show a bearish trend, it can move upward again and target higher levels. However, if it is accompanied by selling pressure and manages to close below its previous swing at the 5,093 level, it could face even more selling pressure and move toward the order block area and the rejection block zone. Continue its movement and then move upward. By analyzing the 1-hour time frame of the TALA symbol, we can see the price movement. After forming a swing toward the sell side and buy side, it was accompanied by selling pressure, moved downward, and entered the breaker block area. And finally, after forming an order block candle, it moved upward. And if there is a pullback, we can use this opportunity to enter a buy position as well. We can place the stop loss behind the zone and enter the trade with a risk-to-reward ratio of 1-to-1 or 1-to-2, aiming for the target. Currently, using the CVD divergence indicator, a negative RD has been identified, which indicates the possibility of the price turning bearish, and this suggests a short-term correction, and we also see that the price has entered the overbought zone. However, it has not managed to enter the high potential zone, which could be a confirmation of the end of the bullish correction, and this could mark the beginning of a bearish trend in the market, so we need to closely monitor the price action behavior. Also, based on the smart money and ICT approach, we see that in this section, the price has broken a change of character level. This indicates a phase shift from bullish to bearish. This price movement could simply be a pullback to the fair value gap area or the order block zone, which we can see from here. It's moving downward. As a confirmation and signal, if the candles are accompanied by bearish displacement, they could move down to the pin bar candle area and the order block zone at the 5,056 level. However, if they happen to have a notably weak and fragile bearish market structure, and the candles are accompanied by very little downward momentum or selling pressure, they could be strongly rejected and pushed back from the order block at the 5,148 level, and begin to trend in an upward direction, and continue their bullish trend on the 15-minute time frame of the symbol. Gold. By using the ICT Killzone TF Lab indicator, we can identify the Killzone areas and trading sessions. As we can see, right after the New York session opened, there was an aggressive move downward. During the London session, the market entered a consolidation and range phase. And finally, during the New York session, there was an aggressive move downward and the market entered a distribution phase. We can predict this by observing the current price movement. During the Asian session, the price moved upward. A fair value gap has formed, and during the London session, the price could move downward. Liquidity is being collected towards the sell side, entering the gap area at level 5,157. Then, with increased selling pressure, it could move further downward. So that liquidity on the sell side can be collected. And if the price closes again in that area, we can use this opportunity to enter a buy position to the target of the internal swing highs, which could be reached during the New York session if there is a bullish distribution move. and become profitable.